Hi, and welcome to the Stockscores Market Minutes for March 2nd, 2015. Let's talk this week about market corrections. Corrections do not mean trend reversals. They're simply a process of taking the emotion out of the market and recharging, in the case of an uptrend, the buyer interest, or in the case of a long-term downtrend, the seller interest. They usually begin when price has run away from the long-term trend line. Now, we tend to see in an upward trend before a correction, the volume coming down first, the buyers showing a lack of motivation. And then we start to get breaks of short-term trend lines and the building of falling tops. In the case of a downward trend line reversal, it's the exact opposite. We see some rising bottoms and some breaks of short-term downward trend lines. Let's take a look at the chart of the S&P 500 just so you can see this process starting, because I do think that there's some potential here for the start of a little correction in the S&P 500. Now notice that this short-term upward trend line, and this is a 30-day, 60-minute chart, so just looking back over the last 30 trading days, there you can see some falling tops starting to build, and on Friday at the close we had a little bit of a break of support, and this upward trend line has been broken. That is very early stage signs that the sellers are getting motivated. Notice also that the volume has been very light through February. In fact, this past week it was incredibly light compared to what we would normally see. So those things are telling me that the buyers are tired and that they're looking to take some profit in the strong stocks. And that has been largely the large cap US stocks. However, it may simply be that money is going to come out of those large caps and rotate into some of the smaller caps. Now here is the long-term chart of the S&P 500, and you can see that it's not quite at the top of its channel, but it is certainly well above the upward trend line. And that's another reason that we could probably see a little bit of profit taking here. That doesn't mean that the long-term trend is over. It just means that in the short term, there are some signs that the sellers are gaining some momentum. Now here's the chart of the the Russell 2000 Index Fund, symbol IWM. And you can see there the recent breakout through resistance, but notice that it is not showing the same sort of negative chart that the S&P 500 is. What we are seeing here is maybe money coming out of those large cap stocks that have been strong lately and maybe moving into some of these smaller names. And so I do think we're beginning a sector rotation. Here's a chart of the TSX 60. Again, this is the 1 hour, 30-day chart. And you can see that a little upward trend line was just barely broken. I wouldn't call that a real critical factor, especially since it's from a new high. However, it is important to note that the tops are not rising as quickly as the bottoms, and that means again that the buyers are getting a little bit tired. Now, when you look at the longer-term weekly chart, you see a reason for this. The TSX has bounced back actually quite nicely and is coming up to that long-term horizontal line of resistance, and that just simply means that the sellers are going to get a little more motivated. Now, I don't know that there's going to be a correction starting Monday morning, but there are some early signs that the buyers are losing their power. Now, the TSX Venture is actually trying to do the opposite. It's been in a long-term downward trend, but it's built some rising bottoms in the very short term, and it's trying to break through some resistance right now. And if it does, we might get a little bit of a bounce back, nothing to get too excited about, but it is keeping in the theme of money moving into the smaller cap stocks, money looking for places where it can get a return. Now here's a chart of the US Treasury bond ETF, the 20-year Treasuries, and we had a pretty big sell-off the previous 3 weeks. This week we actually bounced off of this first upward trend line, and that means that we should bounce back some more. The critical question now is whether the Treasuries make a falling top, in which case they're probably going to break down and fall all the way to this upward trend line, or do they rally back to the highs, in which case we're probably simply starting a period of sideways trending price action on the US bond market. Here's the US dollar, and it's a very noteworthy chart this week because it is breaking from a flag pattern. You can see I've drawn a little red line right here, so this is a pullback, and it broke that pullback in a long-term upward trend, very similar to what happened back here. Now that is a sign that this is a chart that's going to continue higher. It looks like the US dollar wants to continue to move up. Now that's important when you look at things like gold and oil because they tend to move in the opposite direction of the US dollar. Now gold found a little bit of short-term support. It managed to close above its open on Friday, and so I think it could bounce a little bit more, but big picture, still a fairly negative chart on gold. Oil is starting to break through some short-term, and I mean real short-term support zones, and with the strength in the US dollar, it wouldn't surprise me if we see oil try to retest those lows from last month. That's a bit of a concern because we still haven't broken that downward trend line. So oil is still struggling to find footing, and I think you need to be pretty cautious with the oil stocks. Finally, here is the VIX, the fear index. It is at long-term support. Another reason we could see those sellers come in to take some action in the US stocks because it's just a point where volatility has gotten quite low and the expectations for volatility are low, and that's often the point where you get a bounce back, much like we had here, much like we had here. Now, if there is a correction in the US stock market, it's no problem. I love to trade corrections. They're an easy way to make money. You just focus on trading things like the VIX, which tend to rally very quickly when there is a little bit of fear coming into the market. You just have to switch your approach to the right thing to trade. All right, so US stocks long-term still bullish, got a neutral rating short-term, and I want to put a little bit of caution on US stocks. Canadian stocks, long-term neutral, short-term neutral, coming into that resistance at the highs. Gold, neutral, you could almost call it bearish on the long-term chart for gold. It is at some support, so it's trying to bounce. That's why I put a neutral short-term rating. The downward trend, longer term, remains bearish in oil. It is trying to make a bottom, and that's why I've got a neutral rating, but this week it started to show some weakness in that bounce back. US stocks, as I said, are showing early signs that a pullback is imminent, but money may simply move into some of the smaller cap sectors. Canadian market is holding well, but coming into that long-term resistance. Oil starting to roll over, and it may retest the lows. You should be cautious with that if you've been trading the energy stocks, because I think that bounce trade is over for now. Gold trying to find support, but the buyers still lack motivation on gold. Well, that has been the Stockscores Market Minutes for March 2nd, 2015. Have a great week in the market and trade well.